Nintendo earnings quality. Did profit really jump 150%?
My view. Quality improved, but the headline runs too hot.
What is the short answer behind Nintendo earnings quality?
In short, software helped, while a US tariff refund boosted profit.
Why should an investor in the United States care?
The Americas were Nintendo's largest region at 42.2% of sales.
So this is also a US demand and trade policy signal?
Exactly. We need to separate repeatable profit from refunds.
Start with the fresh official release.
Nintendo posted its fiscal 2027 first quarter on August 6.
What happened to sales in that matched 3-month period?
Net sales fell 9.5% year-over-year to 517.8 billion yen.
And operating profit moved the opposite way.
Yes, it rose 150.5%, or about 2.51 times, to 142.6 billion.
That sounds like profit tripled while revenue shrank.
Not quite tripled. It reached about 2.5 times.
What did that do to the operating margin?
It rose from 9.9% to 27.5%, a 17.6-point expansion.
Fact first, what explanation did Nintendo provide?
It cited more software in the mix and refunded US tariffs.
How large was the disclosed tariff refund?
Nintendo said approximately $300 million US.
Wait, can we compare dollars directly with yen profit?
No. At 159.38 yen per dollar, it is roughly 47.8 billion yen.
How material is that estimate against operating profit?
About 33.5%, or roughly 1/3 of quarterly profit.
That conversion is our calculation, not Nintendo guidance.
Put simply, the refund is reported. The yen ratio is our estimate.
Now show the hardware and software base.
By June, Switch 2 lifetime hardware reached 23.68 million.
And lifetime Switch 2 software?
It reached 58.17 million units on the same date.
What ratio does that produce?
Software units were about 2.46 times hardware units so far.
Is that automatically a durable profit stream?
Think of it like an installed base that can buy repeat content.
What happened to Switch 2 hardware inside this quarter?
Quarterly units fell 34.4% against the launch quarter.
That comparison has a difficult launch year base, right?
Yes, a launch quarter is an unusually demanding benchmark.
Did Switch 2 software also decline?
No. Quarterly Switch 2 software units increased 9.2%.
Which titles support that software argument?
Mario Kart World reached 15.39 million lifetime units.
Was it only one successful title?
No. Several Switch 2 titles passed 1 million units.
Why does first-party software matter for margin?
Put simply, Nintendo keeps more of each own sale.
What was the first-party share of software units?
It rose from 64.8% to 82.6%, up 17.8 points.
And the digital sales signal?
Digital sales rose from 69.8 to 132.7 billion yen.
Normalize that increase for me.
Digital sales were about 1.90 times the prior year level.
Is that the best recurring quality evidence here?
My view is yes, because it is not itself a tariff refund.
Now check the financial and currency context.
Nintendo publishes its actual and forecast exchange rates.
Why does currency matter to US investors?
Dollar sales translate into yen, changing reported growth.
What average dollar rate appeared in the quarter?
The quarter used an average of 159.38 yen per dollar.
Nintendo's full-year assumption is lower than that?
Yes, its published full-year forecast uses 150 yen.
What happened to gross margin in the quarter?
It rose from 32.3% to 54.3%, a 22.0-point expansion.
Can we credit all 22 points to software mix?
No. Nintendo says both mix and tariff refunds helped.
Did management raise the full-year forecast?
No. The original fiscal year forecast was unchanged.
So give me the channel's final earnings quality view.
My view, recurring quality improved, but not by 150.5%.
What is the strongest evidence for the durable side?
Digital growth, richer first-party mix, and software units.
And what is the strongest counterpoint?
But a refund near 1/3 of profit clouds the comparison.
So does this make Nintendo a buy?
No. This is financial analysis, not individualized advice.
What evidence would change your cautious view?
I would revise it after 2 strong quarters without another refund.
What would weaken the positive software thesis?
Falling digital sales or weak software per hardware unit.
What should a US investor monitor next?
America's demand, dollar rates, software mix, and clean margin.
Then what is the concise answer to our question?
Profit jumped, but about 1/3 had a refund-sized boost.